Hello, and welcome to another update video about gold. Gold is still in this overall posture, which I think is quite bullish. Okay, so I still see 2024 potentially as year for gold, but obviously we're currently in a correction, so we haven't got the evidence to say that the uptrend has continued, but the move down currently looks corrective. Okay, so that's still all in line with previous updates. No change, also not to the wave count. I have to say though, it's taking ages for it to come down here. In the short term, we were exploring the idea that maybe this correction to the downside is not yet quite finished. So we'll take a look at that in this update. It could of course be finished, yeah, and we can talk about that, but I just don't have the evidence at this stage. What I can tell you though is we are in the larger support area. The Fibonacci levels are more important than the micro count because there will be 2, 3, 4 options in a correction, okay? And the idea is that we are in a third wave rally. So it's just that the corrections are always very, very draining in the metals market. They can take a long time and they can be quite boring. So the idea is that in 2022, in this November low here, October low, this was an ABC structure that formed from then in a wave 1. Now you might think, okay, why is it an ABC in a wave 1? That very simply has to do with the idea that we are now in a fifth wave, and the fifth wave is an ending diagonal. I mean, I can count this as a 5-wave move up, like it's a bit ambiguous where the low is, but here probably 1, 2, 3, 4, 5. That's a valid and reasonable alternative. I did have it like that before, but then looking at the latest structure, it would mean I would have to find a way to count this here, this beast, as a 5-wave move. Now for me, you can say what you want, but this looks more like a 3-wave move. So it's more like an A wave to me. Wave A in 3, and it makes so much sense to see this here as a 3-wave move then as well. So we have an ABC in 1, we have an ABC in wave 3, and the B wave is currently likely unfolding. Could the B wave in already? Yeah, I mean, we've reached the Fibonacci support zone, okay, and if it turns around from here, it turns around and we'll just continue the uptrend, and it would be in line with my primary scenario, which suggests further upside from somewhere here in this region. But we're taking a look at the micro count to highlight if the low, or to understand if the low is possibly already formed or not. I mean, anything is possible, but do we have the evidence for it? And the C wave to the upside should send us to around about $2,400. We should then still see a 4th wave and a 5th wave higher. I don't really see any clear roadmap for any higher than that. The 5th wave can always, of course, always extend. So at the moment, or even the 3rd. So I'm at the moment only using standard targets. So this is a target area that is moving round about, yeah, $2,500. It can easily extend if it needs to, if there are extensions in the subwaves. So we will be able to determine targets more precisely once we have the wave 3 in place, and then even more precisely once we have the wave 4 in place. But it could be the year of the metals, okay? It's just that it's not very obvious yet. But to be honest, everybody who's disappointed with the metals, I mean, you shouldn't really be since October last year, especially, okay? So it's gone up nicely and it's cooperated very well with our overall chart analysis. Now, looking at the, and by the way, is a bearish scenario possible? Yeah, of course. I mean, that's why I'm tracking support levels, right? So if that breaks that 1895 level, then we are likely dropping back into the larger support area, which would mean it's likely a reset of the wave 2, would be extremely painful. It would mean that this entire correction is still unfolding. I cannot rule that out. It would be that this would be A wave down, overshooting B wave of wave 2, but then the move down currently doesn't look like a C wave. Yeah, that can change, but again, for that perspective, there's not really much evidence at the moment. It's of course possible, but at the moment we're expecting lower anyway, short term, okay? So it doesn't make a difference really. But yeah, short term, the idea is that it could go lower still. But as I said, it's not really coming down aggressively. The roadmap would be, and I will have to move this support area a little bit to the right. These are, or this support area shows you the standard Fibonacci levels that are basically relevant in this current B wave pullback, wave B of 3. And in my interpretation, we have a wave 1, we have a wave 2. It looks to me as if at least one more low here to get below this swing low would be needed. At least one more. I mean, I can always be wrong about the microstructure here. Yeah, that's to a degree interpretive and you know, subjective. But at least, I mean, this one more low here below 1988 would be preferred, but it's not coming down directly. So this has to be an ending diagonal itself, this C wave. So it's not an impulse, which means we have to be very mindful and have to be prepared for wave count changes and adjustments. There is possibly here a trend line we could draw. The market reacted to my 3 resistance areas here, and it's so far failed to make a new low, but it's formed a double bottom. That would typically suggest we're coming down a bit. It came down already on Wednesday a bit. And yeah, I would be looking for lower still. I would need evidence to say that the low is already in, which is possible. I mean, I shared with you some options last time. It is possible that, you know, it's extending this correction. So for example, I've got it labeled as an A wave, a B wave, and a C wave down. But it's possible that the B wave never finished, right? There's space left in the standard resistance area from back then. Easily possible this B wave extends a bit higher. And this here was only an A. This is a B. It's a 3 wave move down at the moment. And the C wave up. If that was, if this move down, yeah, if this move down was an impulse, this wouldn't be possible. But it's just a very choppy mess. So this can easily be an internal B wave. But then there is no evidence, there's no setup at the moment for a C wave higher in this larger B wave. So I'm just highlighting options here that you know what we could expect if, for example, the trend line is broken. Could all of wave B already be in? Yes, but then the move up here in wave C would have to be an ending diagonal. So I would have to have some evidence for that. Again, not really preferred until we see some further evidence. So we're a little bit in a holding pattern at the moment. We are in anticipation mode. So in summary, we are in a support zone where I'm watching for a reversal. It looks to me as if we go a little lower short term, but overall from somewhere here, a reaction is expected, and that C wave could be aggressive to the upside because it's a C wave that could be an impulse in a third wave, which is typically the most aggressive wave in a cycle. But there is no evidence that move down is finished, so I short-term focus on lower, anticipating, however, a reaction, but I'm focusing on lower until we see a first impulse above resistance. That's my update about gold. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in daily updates about the S&P 500, as well as updates about stocks, then check out our S&P 500 and stock service. You can find the link in the video description. Thanks a lot for watching. Bye-bye.